Sam Bankman-Fried is in jail. Recent inflation numbers suggest inflation may be going down, or we'll see on that. Today, let's look at some price charts and some of the major crypto projects, as well as some other markets, to get a feel for where money is moving to and where it may be moving from, to see how that might impact the crypto market. Welcome to the Crypto Rain channel. I'm your host, Jay Rain. And if you like money and crypto and you're looking for a seasoned investor take on the crypto market, join the Rainmaker family. Also hit that like button. Do note, I'm not a financial advisor, neither is Paul. I'm a crypto investor myself. Paul invests in many, many markets. We do want to thank our Patreon members. We have a private Discord that our Patreon members get access to. Also, we have a free Telegram group you can join below with a fantastic community. Our admins frequently purge the bots, and we kick toxic people, so that it makes for a first-rate community of intelligent people to join and get ideas from or bounce your ideas off of. Now, make it rain on that like button and strap in for the show. Let's welcome Paul from Definity.
Great to be here. Most interesting market I've seen in a very long time, and I can understand that everyone's on the sidelines, but could be some really interesting opportunities coming up. So I think it's an important time to be focusing very closely on the macro theme, as you were suggesting.
Absolutely. It'll be fun to go through some of the stuff we're going to go through today. We didn't get any suggestions of tokens or altcoins to review from the audience last week or the week before, which Paul and I were talking about that. That's like, you know, sometimes the market, I like to think of it like, not only does it take you down, it kicks you when you're down. And then it stops kicking finally when you're not moving anymore. And so, and is ready to run and go the right direction. So perhaps everyone's sufficiently depressed that the market can finally turn around.
Yeah, that's very understandable, given the way the markets have traded, the way people's personal finances have been hit recently, the general mood of this time of year, and everything else. So everything's coming in at once. There's wave after wave of negative news from crypto, and people are obviously worried and scared and pulling risk off the table, which is completely understandable. But it's also important to be here and to kind of witness this time and this period, and then to look back in a few years' time and say, okay, now I recognize what a low looks like, or potentially what a low looks like. Okay, nothing's guaranteed 100%, but for people who've been in the markets a long time, this is what lows usually feel like. No one rings a bell at the top. Well, they do, but people don't listen, and it's the same at the bottom. It's really kind of hard to pick the low, but that's why markets are hard, because it never feels like the right time to be getting in. Now, you mentioned inflation, and as you probably know from previous shows, we've been saying that the strategy has been that inflation will be weaker than expected. We said it fairly explicitly, and we said after the CPI print that there would be a big move up in risk, and that's happened, and the dollar's continuing to weaken. So as far as I'm concerned, it's steady as you go with the strategy as we've had on the table. There's nothing to change that. If anything, it's becoming stronger. So whilst there might be a bit of a consolidation, because you get short-term players who were looking for this announcement that CPI would be, not as hot as the market was thinking. Short-term players take profits. After a while, the market settles down a bit, and then we move into the broader, longer-term trends, which I still believe is very supportive of risk on. And we'll have a look at some of those, and then we'll come to, if you want, obviously looking at the majors and see how they're being impacted. But if we start off with the big one, which is obviously the dollar index, if you look at what's going on with that, 14 around 110 to 114, 115 was the topping period, and market made a triple top, broke this support at 109, and it's been going down quite smoothly ever since. Now, we can't rule out a retracement. Obviously, it's possible that the market can come back from this, but it looks very structural, like we've seen the top. And I think any retracements will be an opportunity to potentially sell dollars. And that's really good for the broader market. It's very good for risk on. Now, we've got this final hurdle of this upward trend line. If we go back you can see this is where I was bullish on dollars and was looking for a rally. And the inverse is coming in now and has been for some time. But I still need this trend line to break. And when that does, if and when that does, I think pretty much a when as opposed to if, we could be looking at 100% retracement. So a really big move down in the US dollar, which is great for anyone who wants to take risk. If we're looking at how the markets are reacting, the Dow Jones Industrials, well, this was the low here, this double bottom.
On that real quick, Paul, for those that hadn't caught a previous episode, what does that mean when the dollar's going down? What does that mean for risk and risk investment?
Yeah, so the dollar was supported by the Federal Reserve, the biggest economy in the world, raising interest rates, and anyone who got debt denominated in US dollars was feeling the pinch, because there are some currencies out there that peg their currency to the US dollar, and when they raise interest rates, it puts pressure on them inadvertently. So the slowdown in the US dollar, or the slowdown in the US, affects everybody. So as a benchmark of how the Fed are tightening interest rates and interest rate perceptions, the tighter they raise interest, or the more they raise interest rates, the more pressure that puts on the rest of the market, the more the dollar goes up. So because yields go up and money flows to where it's best accommodated, and if interest rates are higher, people move their money into the US dollar. And if they expect it to be higher, then it has this double effect of the currency strengthens and they get money on the deposit that they're holding within the US banks. But the inverse is true. So if the Fed are now kind of backing off their, the data suggests that the Fed should back off their interest rate rises. So they were talking about 75 basis points, 75 basis points, 75 basis points clips to, aggressively hike interest rates. At the very least, the markets had been expecting, or we've been expecting, that they wouldn't be doing it that quickly. And if they're not going to raise interest rates, it's the equivalent of saying, well, there's no party to be had here. Why would we go to this party if it's not going to be as good as we expected? And, interest starts to sort of tail off and people won't go there. And so this is the dollar kind of deflating because it's not being rewarded by interest rate rises. So it's really a reflection of how quickly they were willing to raise their rates against on the global stage. And when it starts to weaken, it has a double effect of people who've borrowed in dollars. They're able to service that debt, so they have extra cash that they can put elsewhere. But it also helps US companies, because if Apple are getting money from abroad, from all the countries that they operate in, if the dollar's strong, then that conversion, if you think of it that way, if you're getting Japanese yen and that yen is weaker and weaker and weaker, then your profits are going to go down. But if it's the opposite way, if the yen is getting stronger, and you're earning in yen, and your dollars are getting weaker, then you're actually earning more dollars. So that's good for profits. So you can see broadly how companies are helped. US companies are helped themselves by the weakening of the US dollar. But broadly speaking, it helps the rest of the world because you're the biggest economy. You've got the biggest economy. So it's really a function of interest rates. And perhaps we should just look at that, because what we've been seeing is if we look at the way mortgages are priced, they're priced off 10-year money, which has been rising. And so if you think of it this way, there's money, the cost of money now, and there's the cost of money in 5 and 10 years' time. And the market prices that, and it knows that the price of money now can be different to the price of money in 10 years' time. So if the economy is very strong, interest rates in the long term will go up and the curve will rise, and we'll see that in US government bonds. So we look at 10-year money to see where the market thinks interest rates will be in 10 years' time. Now, this chart here that I've got on the screen, you can see that this has been going down from this peak of 4.335%. We got a double top formation, and this has been weakening. So this is why I've been expecting the dollar to weaken, and why I've not thought that inflation was going to be the big problem, because this chart, whilst it had a good run up, it's now actually been turning down pretty aggressively. And we can look at the different parts of the curve to see how the Fed will respond, because the market moves and the Fed tends to follow the market rather than the other way around. Although everyone will tell you that they manage the market, it's actually the market manages them. But that's a much longer conversation. If we look at the 2-year money, this is forming a technical pattern, very clear technical pattern that looks like it's going to go down. And if we look at the 6-month money, which is usually pretty close to what the Fed, or leads what the Fed's going to do, I was saying last week on the show that this was one that was still relatively strong in terms of its trend if you compare those charts. But you can probably see that this is now starting to come lower. Let's just zoom in there a bit, see if we can get a bit closer. You can see it's starting to tip down. So that's the first sign that this trend in the very short-term money is weakening. So in extremely simple terms, as long as interest rates go down, people have more money to speculate with. And if they're going to go down in the US, they're going to go down in the UK, and they're going to go down everywhere else, or at least stabilize, which means that the broader party can continue. It means that people will have money to risk in other areas, and that will mean that it will lead into the stock market. It should lead into crypto. So the most sensitive of all of those is the most sensitive market out there is the equity market. It's not the biggest, but it is the most sensitive. So if we can look at the sectors that have been benefiting from the potential interest rate cuts, you can see that the Dow was very quick to move higher. We got this base, again, we talked about it on the show in October, double bottom. The market's rallied a long way. So you can see why people who were looking for a base around here, when they got this spike up here into resistance, they took their profits very quickly. So the Dow's been doing very well. The Nasdaq, not so much. You see the difference between these two. The Nasdaq is lagging, very much lagging. Whether that's a broader problem with technology stocks, maybe there's a maturity aspect that's a problem there, or maybe it was the pandemic that gave them such a massive boost that they're just correcting back to a long-term normal. I think either way, if there is a broader bull market, it should still follow. And so I'm still bullish on stocks broadly, and the S&P 500, it got very close to some extremely strong resistance. This 4114 is a massive level, as you can see in blue, and it got close to that just after the CPI print. It hasn't quite broken it yet, so I'd like that to go. But ultimately, even if the market does come back and consolidate, I still believe that the sentiment was way too bearish in the summer. And I think the market's still pretty much short stocks and expecting a crash, or at least a downward phase. Certainly the economists are, because they're saying the economy is very weak. But what they're not seeing is that the stimulus will be coming in as of kind of now. The Fed are realizing that they've raised interest rates maybe too quickly. And if they pause, then this has got a long way to go on the upside. So it's a kind of weird element to markets, that they are extremely efficient on the one hand, but on the other hand, they're not really. It takes the market a while to work out what's going on. So
it's safe to say that when interest rates are going up, the Fed is raising interest rates. It's like a big vacuum that pulls money into the US dollar, and usually out of equities, out of things like crypto and other risky assets, into the dollar, because they can get higher and higher yields. And so when those interest rates pause going up or even start coming down, people then look to start placing the money back into riskier bets.
Yeah, exactly. So if you imagine that people who've borrowed money, so some people trade with real money, like money that they've saved. Some people trade with money that they've borrowed on leverage. But that borrowed money costs money. And whatever your endeavor, if you decide to start a business, or you're trading, or whatever you're doing, the cost of money is an important factor. So we have to remember that crypto was born into a period where interest rates were either near zero or in some cases negative. In that environment, you can borrow a huge amount of money. The banks would have lent you probably a lot of money at a very low interest rate. So if you're borrowing an interest rate of say 1%, well, and you're looking at crypto and you're saying, well, how much does it move in a day? It can move 5% in a day, 10%. Some of the altcoins can move 30, 50% in a day. That's not unheard of. So the amount that the market is moving as a factor of what you're paying for in interest rates is really important. So it's a consideration. So if you're not making any money on your deposits, it's just sitting there. Like, I don't know what your interest rate would be in a bank in the US at the moment, but for the last few years, and probably still now, you're not getting a great return. You're getting a very low return. In fact, that low return probably means that it's best not to have it in the bank account. It's best to deploy it somewhere. But that's exactly what the Fed wanted people to do, because the economy was in trouble. And so that was why they wrote checks to try and help people during the coronavirus pandemic, inverted commas. So what you have there is people aren't getting a return on their money, and they're seeing these asset markets that are pumping, and it doesn't cost very much to borrow and put your money in there. But when interest rates start to go up, that cost of money becomes a real issue, and still relatively low compared to the volatility, but it's an issue. It's an issue for businesses. It's an issue for home owners who are looking to either move and remortgage, or businesses that are looking to buy a plot of land and maybe build on it. So interest rates are a massive function and really important element. And again, I'd say that probably nobody paid any attention, or most people in the crypto market wouldn't have paid any attention to the fact that some of the major bond markets, the yields were actually negative. So that meant that if you put money in a government bond, you were guaranteed to get less money back than what you put in. So it was 100% guaranteed to lose money, which is, again, why people put it elsewhere. And so this is what we're seeing now, is the pains of normalization, a certain amount of normalization. And inflation in itself is probably really going to be running at a much higher level than the official stats are going to say. But the government created quite a lot of debt during the pandemic, and the only way to get rid of that is through inflation. It's to allow inflation to get out of control, well, not out of control, but allow inflation to go up at a rate that's much higher than official figures, because that debt pile becomes smaller and smaller. So during inflation, you're actually paid to borrow money. It's actually better to borrow money, because that debt deflates away. And at some point, there will be that realization, and the asset markets will start to go up quite aggressively, even though the news on the street, if you like, is all about recession and how things are going to go kind of pear-shaped next year and what have you, and the housing market's really bad and all that stuff. That's the sort of news flow we're getting in the UK, and probably the same in the US, but it's unlikely to be like that.
Yeah, I'm jealous that some big organizations get to borrow at just above the Fed funds rate. Wouldn't that be amazing to have access to funds at those prices, especially when the Fed funds rate was next to zero?
Yeah, I mean, absolutely. It was. I mean, some people could see that rates were going up and just tried to get a loan. I mean, I still think that given inflation, given where inflation is, it's still
Pretty low.
It still benefits you to borrow money, really. I'm not suggesting that people do it. I'm just saying I can see the business case. If you're getting a good enough yield on, say, a certain property or whatever it might be, I don't think it's going to necessarily deter people from borrowing money. But yeah, there is it's not as good as it was, of course. But what we really need to see is the asset markets respond, and we're seeing certain markets respond. Like, for example, we were just talking offline at the start of the show, and you wanted to look at like gold and see how the precious metals have been reacting. And this is palladium. Sorry, I actually wanted to look at silver, because silver had been underperforming gold for a while, and now it's sort of coming back with a vengeance. So silver's been doing very well, and it's further being pushed higher by a weaker dollar. So the fact that this is priced in dollars, if we change this and price it in pounds, you can see that it will look slightly different. But it's a function of how weak or strong your currency is. So if the actually, what's that? That's not pounds for some reason. That's the Singapore dollar. Let's see. Let's make that work. No, it doesn't seem to want to. Don't know why. Let's try that once more. Right. No, it's changed. It changes immediately to GBP. Why is it doing that? That's really strange. No, just go straight to the Singapore dollar. Anyway, let's go back to gold, as it were. But if you were a, say, a Japanese investor, or sitting in Japan, and you're watching your currency decline, you could buy Bitcoin and you could buy gold or silver. And gold and silver, even if it against the US dollar were going sideways, against the yen, which would be your currency, it might be going up. So sterling was very weak recently, especially with all the political turmoil, and gold looks very much more bullish on a sterling chart than it does on a dollar chart. But now the dollar's weakening, this is starting to fall into line as well. So gold is going up and silver's going up as well. So both of these precious metals are rising. And we're also seeing something that I really like, which is copper is going higher. Now, this ties into what's been going on in China. So the coronavirus policy, which was completely untenable in China, had to at some stage end. And the rest of the world was kind of looking at the end of it, and they're just hanging on to their policy. So what you ended up with was a stock market that was just being pressed lower and lower and lower. I think, again, we mentioned it on the show, but there came a realization. I think we talked about how this should turn around when this would play catch up with the rest of the world. So there is far more for this to go in terms of the upside now, I believe. And we've got this great big trend line here. If that goes, which I think it will, there will be a catch-up play in China and the rest of the Asian markets. So that's been a factor that's not been around, as it were. That demand has been put to one side. It's also affected a lot of US companies who haven't been able to get certain products that are made in China, and that's the essence and the problem of the chip shortage. It's also a factor that causes inflation, because I've heard of stories where second-hand goods have been going for much higher prices than the new prices, because people haven't been able to get hold of the brand new prices. So they're in the shops, but just saying, out of stock, expected June 2023. So if you've got a second-hand one, then you could sell it for more than the price that the shops are trying to sell them for. So that creates an element of inflation because of the supply chain. But that will settle down, and it will go back to normal, and then inflation will come back down. But their economy will start to function a little bit more normally, as it has done before. And then they will suddenly start to demand precious metals and base metals too. So, and that's why I believe we're seeing the rally in copper, which is not in a bear market. It's very much in a long-term bull market. It's had a corrective trend. It's now moving higher. And although it's in the middle of that range, I still believe it will go to new highs at some point next year or the year after. So that's normalizing, which is again a good sign. So how all this ties into the crypto market, we can discuss.
Yeah, what's interesting is looking at that, it doesn't, that's the chart of copper. Yeah. The similarities between that and the chart of Bitcoin are kind of astounding. If you look at when the low was in copper prices, it's the same low of when Bitcoin bottomed out. And that's, what is that, March, April 2020.
Oh, down there, yeah. I
Yeah,
mean that was the coronavirus crash.
right.
And
And it
so
came and peaked right at the same time as Bitcoin did, and a second peak, right? That's somewhat of a different time. That was a later peak, but interesting. Looking at that chart, I was like, that's not too dissimilar from the Bitcoin chart.
well, it does follow risk pretty well and the economy pretty well. Copper is known as the metal with a PhD, as is kind of said in the
because it
market.
tracks out the risk markets. Then,
Yes, exactly. So that's why I like to keep an eye on it, just to see whether the story on the street follows the story on copper. It's just one piece of the puzzle with everything else that we were talking about.
that makes
But
sense.
so I like to keep an eye on that. But again, something we discussed on the show last week was, and in previous weeks, was how bearish the sentiment is in the crypto market, and indeed today even more about Binance. And lo and behold, we've got a rally, and this is the rally that we were discussing that could potentially happen, and it's hitting as we speak some very good resistance here. This 18,000 area, 17 and a half, 18,000 is big resistance, but the rally isn't really being formed through Bitcoin. It's coming through Ethereum. But just to say, with regard to this, I like this even more, given today it hasn't gone down. It's actually gone up. I still believe people are short. And yes, there is potential for another move lower. And this isn't a particularly big base. So we have to tread carefully. But it's not responding like a bear market. That is for sure. Not now. It was before, but not now. And I firmly believe a lot of this was a lot of this underperformance was the fact that we didn't know what was going on with FTX and other situations. And so now it's come out. That's usually, or should be, the end of it. And given that the difference between the broader market, the bullishness in the broader market that has had its first wave, is still underperforming everything. So that's why I think this is performing in a way that people are scratching their heads. They're thinking, why hasn't it gone down? And that's because the broader market is moving to risk on, or is in risk on mode, and they're willing to take a risk at these lows, and they're looking at, the darkest point is comes before the dawn, and that's potentially where we are now. So in a few months' time we should have the answer to that. But despite all of that, factually, Ethereum still hasn't broken its 2022 low. So if it hasn't broken its 2022 low, then what is going to make it break its low? I mean, how bearish can the news get? Yes, of course it can get bearish. It is possible that some other things can happen. I mean, it wouldn't be great if Binance went down. I think that would cause huge problems for perhaps quite a lot longer. But the market isn't trading like it believes that will happen. So, I still think tread carefully, but I'm not changing my short-term bullish view here.
Yeah, I have very little funds on exchanges these days. I started pulling them off massively about a year ago when things started going just kind of weird. So I have tiny bits on exchanges. But Binance, I put in a completely different category than FTX. I've watched Binance since it was a brand new company in 2017, and there were big behemoths compared to Binance. Binance was an infant at the time, and Binance just made good move after good move after good move. And in business, there's this principle of the law of the lid, which says you can't attract, like a CEO can't attract better leaders than himself to, or herself to, the business. But if you have a really strong leader, they're able to attract top talent. And I think CZ's a genius. I think he's an amazing leader and he attracts great people. And Binance is an exceptional company from everything I've seen. So I believe him when he says that the funds are backed. Who knows? Could be fooling me, but I don't think so. I think they're probably fine. He's continued to do things very opposite of like Sam Bankman-Fried, what I like about CZ is in the crypto space, when you hold a token, like sometimes it's a little bit ethereal what you're holding, right? What is the value of a token? It's not a share in the company. It's not a stock. It's not a piece of ownership of the company. And so what I like about CZ is he's continued to give more use cases to the BNB token, which has not only benefited CZ and the team members at Binance that held the BNB tokens, but has benefited all the people who believed in him and invested in him, right? So I've just seen him do good with all the power that he's accumulated. And never have I seen him take a selfish move. And so I'm a big fan of CZ at Binance and what Binance has done. And so all this FUD, I think it's some forces trying to get Binance to crash if they can, so that way they can pass, crippling regulations. Is my guess, because somebody's really pushing that narrative hard, and who it is, I don't know, but it's coordinated.
Yeah, that would make sense. I wouldn't rule it out. But yeah, I say I like to look superficially at the market in terms of the news, because I know in times like this you can look at something technically that can look bullish and you can be scared out of it by the news flow. So I try to have a superficial understanding of the fundamentals, for that very reason, because otherwise I would look at a chart and think, well, I can't buy that because there's too much bearishness going on and this and that might happen, etc. But I haven't done enough research to sort of kind of confirm or deny what you've just said there. But it is pretty clear that there aren't that many big players out there, and it would not be a great sign if there were more shoes to drop, as it were.
Let's
And
talk about potential shoes that could drop, because Binance could be one that would crash the market, because we're kind of looking at what other bottoms we could hit, right?
yeah,
What could take us lower? So Coinbase could fail. That would be a big deal.
yeah.
Say the XRP lawsuit, they don't come to a settlement and the SEC wins and declares the XRP is a security, and then declares every cryptocurrency altcoin is a security. That would be bad. So these are just potentials that are in the air that could push things lower. Binance failing, Tether failing, or USDC failing. So those are probably the biggest, I don't know, scenarios that could really depress the market, right?
Yeah. Look, the market isn't trading at the moment like it believes any of those things are going to happen. If Ethereum was trading closer to 1071, and maybe it will over the next few weeks, we'll see, but it's not doing it now. It would still have to break this low, this key low, and then get within shouting distance of its 2022 low for me to think that there are serious problems out there. Because as we can see with this downward trend that was here before, there are people out there who knew very much what was going on, in the same way that you can look at a share price of Enron and back in the day and see that there was something wrong without actually knowing exactly what was happening. There was something major going on in the market, and it was affecting the share price. So if I'm still hopeful. I'm still hopeful that actually the market is still forward looking and expecting the next few years to be very much positive, and that's why risk is being taken here at these levels right now. It will only make sense, in a maybe a month or 6 months time. But we can see that's the nature of the game, isn't it? It's like we don't know anything for sure. You can only work on the basis and the probabilities of what's in front of you. And what you're asking is a question that everyone else will be asking as well. And I think that's what's encouraging people. When they don't know what to do, they will either pull their money or do nothing, and probably for quite some time. So that this may take months, even if this is the worst case scenario that we've got right now. It could take months before people want to get back into the markets again, or it would take a new round of excited people about crypto to come into the market, to who've got fresh capital, etc., which is what the market eventually is. So the people who aren't going to trade anymore, they're out the system, and then there's people who will come in with optimism and say, okay, this is overdone, or they're starting new projects or something that we haven't thought of or seen, and that starts to reignite interest in the sector. But at the moment, if you didn't know what was going on, and again, that's what reading charts is all about. It's saying we don't know the fundamentals, and yes, you know all those risks may come to fruition, and you could be right, and I would never say that's not possible. But when you look at the chart, you can see we've either gone sideways for quite a number of months in Ethereum, and we are starting a very small uptrend here. And a trend has got to start from somewhere. And so that's why I'm keen to follow this. This is why I'm quite excited about it. Well, tempered with caution, but I'm thinking this is the sort of thing that if it starts to go much higher through the 200-day moving average, for example, then it will really stick out as a anomaly compared to the sentiment that's out there and everything else that we're hearing. So, and I would also think that the people who've shorted it will be looking to, cover their positions, but they're probably not going to if they think that the news flow is still going to be negative, which is kind of how the beginnings of major lows start. But, if we are going to see a big bull market from here, it's not imperative to jump on right now. And my kind of strategy is always to wait until it's clearer, and then that's safer. So I could even understand if people are bullish that they'd sit on the sidelines. But it is very important to point out this sentiment kind of gap between what's going on and the actual reality of the way the market's trading.
Do you mind if we step over to the XRP chart and let's look at what's going on over there? And there's rumor that there may be a settlement coming tomorrow.
Oh, really?
So let's see if the price gives us any indication of what maybe some insiders know or don't know.
Yeah, it's not looking, look, I guess you have to preface everything with just in case it suddenly collapses. And that's the fear, probably overblown fear, but it is still a possibility, which is why we have to put our parachute levels in. But this to me is a very important support line that has been developing for some time. It's no longer in a downward trend from that point. From the start of here, it's at the very least been going sideways. It did try and rally, it came back, but it's in a support zone. So from a technical perspective, yes, it's would I be jumping on it right now? Probably not. But does it look like it's going to collapse? No, it doesn't either. It's kind of in a neutral position, which is fine by me, because anything that's neutral is actually bullish, given the current scenario. So we're in a range. There's nothing to suggest that it's testing the low here and looking to break lower. This is the danger zone. It's coming in around 30, just below 30 cents or around 30 cents. If it starts to approach that level, then I would get concerned that the market's going to break down. But we've got this very gradual upward trend here, and it's being cornered by this downward trend. So it's what I like to say, it's been painted into a corner. So it's got to break out into a new trend at some point. And we just need to wait to see what that is. It could be down, but given the potential bearish ramifications, it's performing relatively okay. So I think, there will be a lot of stops below this 30 to 31, 32 area. And if it breaks that, it could go down quite fast. But that's only an if. And again, considering it's an altcoin and a much higher risk proposition to the majors, it's not been doing too badly.
Awesome. Let's take a step over to Cardano and just look at what it's doing.
Yeah, so Cardano, actually, I'm glad you mentioned that, because I looked at that today thinking, this is starting to perform much better than it has done for a long time. So we've been very cautious on this. We had this triangle, and triangles are usually bearish patterns. The overall trend has been bearish, and it broke the low of this triangle, rallied up. It was acted as resistance. So it's trading well from a technical point of view, but the trend has been down, which is unfortunate. Now it's going sideways. That's the first step to it moving higher. So it's no longer in a very smooth downward trend, and sentiment is bearish. So I like the fact that it's doing this. Now, it's just step one. 33 cents, as I've got on the cursor here. Important support, important resistance. That's step two. If it gets through 33 cents, then we could start to talk about a much bigger rally. Now, the overall trend is still bullish, so we are correcting a trend, and so we have to tread, quite carefully here. But I noticed this little candle, and I know it's not particularly life-changing given the overall structure of the chart, but I did think it was interesting that it just popped up there, and it's moving away from this low and consolidating. So I think that's worth keeping an eye on. I wouldn't personally step in to buy as yet, but it's on the radar that if it gets through this 33, it's going to look much more interesting. A lot of work to do before this chart turns around, but it's got to start from somewhere.
Mm-hmm. And the beauty of crypto over time, when you're investing in good, solid projects, is even at this low that we're at now, all the way down near 31 cents, that's still almost 20x from the bottom of where Cardano hit in the last bear market. And so, like, a lot of people come in for short periods of time in crypto, hoping they're going to make it rich in those short periods. And the true wealth is made over a 4 to 8 year period. That's why, when I started this channel, I promised everyone in the audience 5 years. So that would be a full cycle and then some to do this show and just talk, because I'm an investor. I'm not a YouTube host so much as an investor myself, and just sharing some of the things that helped me go from just thousands to millions in, say, one market cycle, because I came in 2017 and caught a little bit of that run and then caught the full downside. But I would, I'd seen market cycles before and been investing for 20 years. So I knew when things get cheap and rough to stick around and load up. And I did. And so the next bull run turned my thousands into millions. And so that's the kind of money crypto can make, but only for those that stick around during these types of markets. And I just dollar cost averaged in like crazy.
Yeah, it's as one of the roles that I had, I would train new traders who would come into a trading arcade, and that's kind of like it's not like it's basically a private, kind of privately funded operation, where every few months you'd have traders who'd come in and they'd want to learn about the markets, and they wouldn't know anything other than their economics degree, in some cases perhaps not even that. And I'm not saying they had a disadvantage because they didn't have an economics degree. In fact, in some ways it's probably better, because you can start from a clean slate to teach someone how the markets really work, because standard economics is not going to help you. And what's really important about that is the environment that you come into when you're learning about the markets. So, for example, some people came in during the global financial crisis of 2007, 2008, where you had sort of 1 to 2,000 point swings in the Dow, and interest rates moving all over the place, and currencies and everything was just going crazy. But you have to remember that they thought that was normal, and they got used to that environment and expecting it to stay. So it's an important point what you're talking about in terms of cycles, because you have to sit through a whole cycle to see what's going on. And until you do that, you'll be fooled by thinking, well, this is how it always is. It's always this volatile. Well, it isn't. Currencies for years have been, not moving, and then have only suddenly become really volatile in the last, couple. And again, it's like, well, yeah, there's been some big cycles in the crypto markets where they've been hugely inflated and then hugely deflated. And so this is, as it feels like it's always different this time. It may well be, but these are cycles. This is what cycle analysis feels like. And it's more usual for major lows to be consistent or to continue when everyone's still very bullish. So what I'm trying to say here is that when sentiment turns bearish like this, it's less usual for the market to turn around. It's so I wouldn't have expected to actually have such solid bearish reasons to being out of crypto at this stage. But it points more to the end of a cycle. And I can only say that we will see what happens in the next sort of 6 months to a year and look back and say either, yeah, okay, the trend continued and it'd gone down, or sentiment was telling us something. But it would be very unusual if everything is rallying in 2023, 24, and the crypto markets aren't enjoying a rally as well. So whether that rally goes from a lower base, I'm not sure at this point, but unless I can't see it going away either. So it's a bit of a head scratcher. I do think your point about how these cycles play out is extremely important. It's worth looking back to see how this has happened before and how it could potentially be a lower point and how the cycle will play out in the future.
Yeah, and it can turn around very fast. And when it does turn around, more money flows in very quickly into crypto. Part of the thing I like about it is the volatility, meaning it can go from a low to a high in a fairly short period of time, as low as 9 months. It can go from the utter bottom to a ridiculously high. And so that's exciting to me. And if that seems like a long period of time, 9 months, that's nothing. When I was doing real estate, for it to go from a low to a high would be maybe sometimes 5, 6, 7 years. And so that's at the end of the bottom to, the end of the top. And so it would take a long time. So something like 9 months or 12 months to go from an absolutely devastating bottom to some crazy, ridiculous high is absolutely phenomenal. And that's why I like crypto, because where else can you go from such lows to such highs? Is it risky? Yeah, it can go down fast. It can also go up very fast. That's why I don't play around with leverage in crypto after getting burned significantly. That loss cost me $1.5 million. So I don't touch leverage anymore. I'll let other people want to take those kind of risks, because you can be absolutely right, but be wrong just for a second before you're right. And you lose a lot of money in leverage. Well, it's exciting times, even though it doesn't feel like that. If you're watching this, it feels like devastating, like the bad news is never going to stop, and it will at some point. And this is exactly what lows feel like. This is exactly what the crypto winter feels like. And when other people look back at the charts in the future, they'll look at these days and they'll say, I wish I could have got in then. I wish I could have started then. They don't know what they're wishing for, because they wish they could know all the highs and then jump in after, the despair you feel having been here and watching things go lower and lower and lower. And that's what every bottom feels like. So congratulate yourselves, every one of you who are still here. You are the Rainmakers. You are the Rainmaker family. Like, that is, that was always the plan in order to make life-changing wealth, is to stick through times even like this and still be here and participating. Thank you, Paul, for joining us. We appreciate your time. We very much, the audience absolutely loves these videos where you join us.
Thank you very much. I really appreciate it. Thank you for your comments. And look forward to next week.
Yeah, sounds great. If you haven't already, help us out, help the channel out, smash that like button. We really appreciate it. Do know that the crypto market is slow right now, but good decisions made during these pullbacks lead to life-changing ones when the market turns around. This wrap is for all of you, just to reinforce the principles that we share here. I wrote the words, Charlie from the UK performed it. It's a fun way just to listen to the words so they can help you, because it's emotional being in this market, and music is emotional. So specifically, I had this created to counteract the emotions that try to push you out of the market. Thanks so much.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, buy before you could. Was told to buy when it was pouring like a rainmaker should. Buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I take the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't lead with my heart. Principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, got parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Time is never better, but time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, studying to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong can soon become a bear market. Learning and growing, and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. I'm strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be cracking. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. This game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I'll follow what I learn, not relying on luck. Haters be hating, but time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough, and that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck.